when the market's confused. Steve strolls in with a chart and some probable news. Troy fires up Omega like let's model this mess, while traders at home whisper, please help me stress test. It's the show where the candles dance, volatility takes its chance. Steve says rules, Troy says math, together they chart a hilarious path. Grab your lunch, don't be late, they'll tell you why the market's weird again. Oh, great. They're calling out levels, volatility rebels, equity drama, and index devils. One guy's calm, the other's pressing buttons fast. Is this bullish? Is this bearish? Ah, depends on the past. So tune in, laugh, and maybe learn too. These two make the chaos look almost doable for you. Every Tuesday at noon, hit that stream real quick, because markets are wild, and these two are slick.
Steve, markets in turmoil. Markets in turmoil.
The market can't figure out if this Iran war is good or bad, Troy.
I think people were sad that it lasted more than 16 hours, and now I told him, Steve, a while ago, it feels like being down 90 feels like we're up 40, just considering that we were down 2.5% a while ago. But Steve, how you doing today?
Doing good. I've taken a few trades today. I took an Elmo, one of my price action iron condors, down kind of near the bottom when we started to chop. I thought we might get a little bit more than like 15 minutes worth of consolidation, but instead we decided to rip through highs of day back up to yesterday's low. So that I got stopped out on that. I did take a really nice short bought puts in Tesla this morning.
Nice.
On some weakness. It was kind of acting relatively weaker than the market, and so that worked out well. I'm in a 1 DTE. I usually enter those a little bit closer to the open, but I waited, and so that one's a little bit red right now, but still in fine shape. And then I went ahead and shut my British iron condors off because well, first of all, I got smoked on those yesterday. Probably my worst day of British iron condors.
Really?
And so I figured, you know what? There's gonna be a ton of premium left, so I'm just gonna hold off on entering any more of those. So that's been kind of that's kind of been my day.
Yeah, I've given up a little bit back, but I was telling Mark Anderson earlier, this is probably going to be one of my top 5 days of the year, just because I'm a vol guy. And so
very nice.
Now we need to lock some stuff in, Steve, because when we were down 170, I felt a lot better about that statement than I do now. But we're still doing fine. So
good.
Anyway, I think that this market, I don't know what, I mean, it's a great premium selling's good as long as you don't get to the point like double stopped, which you definitely can in this market,
Absolutely.
So Steven, shout out Steven, an OG in the option maker community for sure, and I think he's in your community as well. Did you get a lot of double stops on the VIX, Steve?
Yesterday it was double stop-a-palooza.
Double stop all day.
I think I did, like, I don't remember how many tranches I did, but I had 7 double stops.
Okay.
So it was the most double stops that I've ever had in a day.
Just put double stop on a double stop. It's my favorite.
Yes.
Yeah. Wow.
I think I got triple stopped on a couple, which I didn't think was possible.
I didn't know that's possible. See? Yeah. I feel like the market just triple stopped me a couple times in my life. Well, the day's going on. Steve, you got a full day because you're doing a class afterwards today, right?
Yeah, after the market closes today, doing another, it's actually our 6th transformer session. So I've been trading what I call transformers, are basically when you take a spread, and once you get to a certain point with that spread, in certain situations, you are able to transform that, hence the name transformers. You're able to transform that into a risk-free spread. So we're doing a new variation of that. I've been trading these for years, and I've been teaching transformers for, I don't know, a few years. But this is one that I've been trading for a while that I'm finally going to release to my people. So yeah, I'm excited about that. Actually, let me share my screen real quick.
Please.
Let's go entire screen. Okay, can you see my Thinkorswim? There we go.
There we are.
I'm going to pull over a little something here to kind of, for those who are either not in the community or don't know what I mean by transformer, here's kind of an idea. So I'll go through a few different variations, then I'll talk about a little bit about what we're talking about today. To start with, so this would be like a transformer on a vertical spread. So this is something where you could start with something like this, which is a bullish put spread, and then you could transform it into a risk-free butterfly, right? I think this is kind of when people start to transform spreads or use different spreads in combination with each other, this is kind of one of the easier to understand and where a lot of people start. And then you can get into things where you can transform the vertical into a little bit wider iron condor. You could do it on the bearish side as well. Take this into a butterfly as well, or a bearish condor. You could start with iron condor. So this is something that I do almost every day, and I have for a couple of years, where I'm taking an iron condor. I prefer to do this with 1 DTE iron condors, but you're starting with something like this, and then you're transforming it into. I like to take a directional approach to this. So you might start with a delta neutral iron condor, and then if I have a bias into the market, I may transform it into this. If I have a bullish bias, I may transform it into this if I have a bearish bias. And if you can see this, and you're familiar with TOS, you can see the profit line is above the zero line, meaning there's zero risk at this point. And so to do this, first of all, you've got to have a little bit of profit come into your original spread first. And then once you have that profit there, so there is risk to start, right?
Sure.
But once you have a little profit, then you could do all kinds of different transformers: bullish vertical, bearish vertical, what I call a double vertical, which is essentially a reverse iron condor, where you can profit in both directions. You can transform it into a risk-free iron condor to the upside, to the downside. You can kind of have double condors. So there's so many different variations that you can do with this. These are just some examples. I like to use unbalanced iron condors, where you're doing something that kind of looks like an iron duck, and then you can transform it into a risk-free butterfly, into a risk-free condor.
You're transforming everything, Steve.
Everything. You can. There are so many different variations, and with options, the cool thing about options is they're so flexible, right? Like, you can create a spread or combination of spreads for any bias, for any, if you think price is going to stay put, do that. If you think price is going to go in one direction, you can do that. And if you are correct at first, then you have all these options to transform them. And today is a perfect this week, or even all of February, is a perfect example where you're seeing crazy swings in the market. And if you can get into a spread, get a little bit of profit, say you were correct in your assumption initially, but quickly flip that into something risk-free, in this kind of market environment, it's so powerful. right? Because now you have zero risk, zero stress, and you have the opportunity at making a bigger profit.
Love to see it. And that's one of those things where it's like people don't understand that this is one of the benefits of options. You know, I've told people for years, like, you look at this and you're like, okay, Apple's going up, you buy stock, right? Apple's going down, you sell stock. Well, with an option, you can think Apple's not going to do anything for 2 days, but then in 4 days it's going to go up, and you can put a structure on there that benefits from that, and that's the joy of it. And I think people do this type of stuff a lot. I mean, like this morning I had a double calendar on, took the put side off, transformed the call side into a vertical, and just lock some stuff in. And it's just a smart way to do it. I think it's one of the benefits that I think people don't realize when you jump into options. And so it's a joy to see it when you do it. So you're doing a new one this afternoon, right?
Yeah. And it is, and if you're brand new to options, probably not where you're going to start, right?
Yeah.
Like if you don't understand how a calendar spread works, or if you don't understand how an iron condor works or a vertical spread, you got to start there, right? You got to get the basics down of the different kind of spreads that you would start with and understand how they move and how they work before you can jump into the kind of, I would call it a little bit more advanced techniques of making the transformations. But yeah, so the one that I've been trading here for a while now that I'm going to share with the community is using a calendar or double calendar spread, and then being able to transform that into a variety of different spreads. So, for example, let me just pull up my toss on here. So this is a spread, for example, that I started as a double calendar, and I was able to transform into a risk-free iron condor.
I know you're probably going to get into this later. What was the kind of date? Can you pull your toss up a little bit more?
Well, I'm hiding the orders on purpose.
Oh, smart. Okay, yeah, smart. Yeah, makes sense.
I mean, me, Troy. I share everything, but because we're teaching the class right after here, I don't want to create a bunch of confusion or questions, because all the details will be discussed. Yeah. But basically, any type of double calendar. I mean, the cool thing about Option Omega, obviously, is you can back test what double calendars perform the best, entering at what time, on what days, all that stuff. And then you can take that information and you can either just trade the double calendar straight up, or the cool thing about this is then you have this kind of tool in your tool belt to decide, okay, my double calendar's made a little bit of money. Do I want to continue to keep that risk, or do I want to remove that risk and make it into a risk-free iron condor in this case, where I have, just kind of a minimal profit on the wings, but my max profit, in this case, is over $1,500, and that's on a 3 lot.
And so you can do it with different durations.
Different durations. I do it on all different durations. These are things you can really put on every day. Obviously, situations like today where the S&P was down 160 points, now it's down 100. You got to be a little bit more careful, but there are different and different durations act differently, right? If you're doing a 6-7 on Friday, or a 3-4 on Monday, or a Friday-Monday combo of the front and back, all of those act a little bit differently. And you'll hear people say, and I think this myth became a little bit more popular from Tasty Trade at one point. They were saying trade calendars when volatility is low.
Yeah.
That's just not true.
No, it's
right.
The data points against that at this point.
Now, the reason they were saying that is that, calendars and double calendars are positive Vega trades, right? Which means theoretically they should benefit when volatility expands. But that's not always the case. In fact, some of my best, I like my 6-7 put calendars on Fridays, right?
Do you say 6-7?
The old 6-7. Yeah.
Thank you.
For the cool kids. I had to
Down
throw
with
that
the
out
kid.
there.
Yeah, down for the kids.
But that one I've found way more often benefits if volatility has expanded overnight, then you put it on early in the morning when the market opens. And then if you get not a huge crazy vol crush, but if you get a gradual move higher with volatility contracting, that's when I've found that one prints the best. And so that's benefiting when volatility is contracting. But the reality of what it all comes down to is, what is the relationship of the front options that you're selling versus the back options that you're buying? What is the volatility doing in the front versus the back, and the combination of the spread that you have on? That's what really matters. It's not whether the VIX goes up or down. It's what the combination of the front and the back are doing.
Yep, makes complete sense. Well, how can people sign up for that? This is turn into a QVC. I mean, you would probably charge $16,000 for that course, Steve.
Oh, absolutely. Yeah.
But
Yeah, that is what I'm charging.
Oh, sorry, my bad. How can people find out about that? How can people watch that?
Yeah, no, just kidding. So obviously, I don't just sell courses. Everything that we do is just part of our membership. Yeah. So this is available for our pro members. So if you want to join, just go to navigationtrading.com. We'll be doing this 30 minutes after the bell today. And it will be part of our Transformer series like I said, this is our 6th Transformer series that we've done over the years. And yeah, I think people are going to like it. Calendars are very tricky, right? As you know, you've traded a lot of calendars, a lot of double calendars.
Yes, I have.
They can be tricky, but this is a good one. I mean, this is a way to where, and here's the cool thing is, like, with an iron condor transformer, sometimes I'm waiting until I get 10, 20, 30% of credit profit before I'm able to flip that into a risk-free spread that I like.
Yeah.
Where with the double calendar examples, there are situations where I've been up 2 or 3 or 5% profit of of the debit paid, and I'm able to flip that into a risk-free iron condor. I've had some that I like. There was one day a couple of weeks ago where I entered it was when the Supreme Court decision came out. I got filled onto my double calendar, and literally 7 minutes later, I flipped it into a risk-free iron condor.
Yeah,
I've had others that take 15 or 20 minutes. A lot of, in normal conditions, it's going to take longer than that. But, there are definitely situations where you can flip it to risk-free within the same day. Sometimes I'll hold overnight, and you're just taking on the risk of any overnight exposure, but it's still very doable.
Yeah. Well, I think people are going to like that. I think double calendars in and of themselves are not a beginner category.
Right.
And so to be able to take that, they call it, there's a reason you call it pro membership. You put your learning hats on, but you'll probably get some stuff out of it, things you didn't think about, or perhaps didn't think were possible in it. So I'm excited for it, Steve.
It'll if you're newer to options, it will bend your mind a little bit, because it's kind of like learning a foreign language, right? If you speak Spanish, I don't understand a lot of what you're talking about, Troy. But once I learn it, then it kind of makes sense, right? So it is a process. You have to put in some effort, right? It's not one of those things where it's just like, okay, buy a put to go down, buy a call to go up. It's more involved than that. And so you better be ready to put in some screen time, put in some effort to understand how the combinations work together. But it's not rocket science either, right? It's anybody can learn it. Let me just say this, Troy. If I can learn it, anybody can learn it, because I'm no rocket scientist.
I was about to say, this is why I got into this field, is because I'm not a rocket scientist. So, right. And I love losing money on any given day. With those two things combined, those are my strengths. So I'm excited about, Steve. You said 4:30?
4:30 Eastern, 3:30 Central, my time. Yes.
Okay. Well, listen, reach out to navigation, get in that, figure out how to do it, do anything possible to watch it. And I'm excited to talk more about it next week, Steve, how it went and everything like that. Cause I love options and I love structures like that. So I'm excited to see it. But all right, everybody, I've got more money probably to lose by the second here. Lots of long Vega. So Steve, I'm going to sign off and get back to it, but excited for it. Have a good rest of the day. You're done trading discretionary for the day, right? That's usually your 12 p.m.
Well, I was one and done on my directional day trades. I was one and done yesterday. I was one and done today. I'm kind of starting to like this, one or two trades and being done staring at the charts all day. So that's
probably takes some mental load off for sure. Just that you're free after lunch is a huge thing. I mean,
yeah, and not that I'm getting away from the charts, because when the volatility is high, that is when I start really focusing more on transformer type spreads. So there's still some work to be done, but just not the directional day trading today.
Love to hear it. All right, everybody, have a great rest of your trading day, and we will see you next Tuesday.